Hey, deep divers, ever feel like you're on a roller coaster when you check your crypto portfolio?
Yeah.
Today, we're going to explore why those ups and downs happen
Mm-hmm.
and what you can actually learn from them.
That's right. We're going to take a deep dive into crypto cycles, how to spot them, what drives them,
Okay.
and how to use that knowledge to make smarter decisions.
Okay, so one of the things that kind of blew my mind while prepping for this deep dive
Yay.
is how much crypto history just seems to repeat itself.
It's true. There are definite patterns in how the market moves,
Yeah.
especially when you look at Bitcoin. And get this,
Okay.
those patterns often correlate with economic trends in the real world.
So it's not just about like some algorithm running haywire.
No, no, no.
There are actual forces
Yeah,
at play.
absolutely. One really interesting connection is between Bitcoin's price and global M2,
Okay.
which basically measures all the money sloshing around globally.
Okay.
Think of it like a tide that lifts all boats,
Okay.
including Bitcoin.
Wait, so if global M2 goes up, but
Uh-huh.
Bitcoin goes up too, does that mean I need to become an economics expert now?
Not quite. You don't need a PhD.
Okay.
But understanding this connection can give you a valuable heads up.
Yeah.
There's even a lag time of about 10 weeks between shifts in global M2 and Bitcoin's price.
Really?
It's like getting a sneak peek at what might be coming.
Oh, that's pretty cool.
Yeah.
But right now,
Yeah.
things feel kind of shaky in the economy.
Yeah.
Recession talk everywhere, interest rates going up.
Mm-hmm.
It makes me want to just bury my crypto and forget about it for a while.
I hear ya. Uncertainty can be nerve-wracking.
Yeah.
But here's where things get really fascinating. The current economic data
Okay.
might actually be a delayed reaction to how strong the US dollar was last year.
Like a hangover from a dollar party.
Exactly. And as the dollar weakens,
Okay.
which many experts predict will happen,
Right.
we could see a ripple effect that actually benefits the global economy.
Right.
And by extension, crypto.
Hold on. Are you saying there's a light at the end of this tunnel? Tell me more.
Well, some analysts believe we might be entering what they call a banana zone.
A banana zone.
It's a period,
Okay.
usually about a year long,
Okay.
where significant crypto gains are expected.
Okay. That sounds promising. But I'm guessing it's not just a straight shot to the moon.
It's more nuanced than that.
Okay.
Think of it as a series of growth spurts and corrections.
Okay.
We might see some initial growth, then a dip, then even faster growth, another dip,
Uh-huh.
and finally the peak.
Okay.
It's all part of the cycle.
And knowing which phase we're in is key to making smart moves.
Exactly.
So where are we now on this banana journey?
Based on current market behavior, it seems we might be in that first corrective phase.
Yeah.
That's why patience is so crucial right now.
That's easier said than done,
Sure.
especially when you see your portfolio taking a hit. Remember what happened with Solana a few weeks ago?
Oh, yeah.
Ouch. Solana is a perfect example of how volatile crypto can be, especially assets that are still relatively new.
Yeah.
It's a good reminder that diversification is key.
Okay.
Don't put all your crypto eggs in one basket.
Speaking of not messing things up,
Yeah.
I love the don't fuck this up approach that
Ah.
we found in our research.
Yeah.
It's basically a survival guide for navigating these choppy crypto waters.
Absolutely. It boils down to 3 core principles.
Okay.
Don't panic sell just because the market dips.
Right.
Stay away from leverage.
Right.
It magnifies losses just as much as gains.
Okay.
And think long term. Remember, we're in this for the long haul.
Okay, so we've talked about cycles, economic indicators,
Mm-hmm.
and how to avoid making rookie mistakes.
Yeah.
But how do we build a portfolio that can actually weather these storms?
Yeah.
What are the building blocks?
That's a great question.
Yeah.
And it's what we'll dig into next. Welcome back, deep divers. Before we left off, we were starting to get into building a solid crypto portfolio. Think of it like constructing a house.
Okay.
You need a strong foundation. Right. And I'm guessing those foundation assets are like the more established cryptos,
Uh-huh.
like Bitcoin and Ethereum.
Exactly. They've stood the test of time, weathered multiple cycles,
Right.
and have massive communities and development behind them.
Yeah.
It's why they often form the core of a well-balanced crypto portfolio.
Okay, so Bitcoin and Ethereum are like the bricks and mortar.
Yeah.
But what about adding some flair, some exciting features? That's where altcoins come in, right?
Exactly. Altcoins represent the potential for higher growth,
Okay,
but they also carry higher risk.
right.
It's like adding a sunroom or a finished basement. You wouldn't build those before the foundation is solid.
So how much of our crypto house should be made of those riskier altcoins, Is there a magic ratio?
There's no one-size-fits-all answer.
Okay.
It depends on your risk tolerance,
Right.
how much you can afford to lose,
Yeah.
and your overall investment goals.
Right.
But a good starting point is the 80-20 rule.
80% Bitcoin and Ethereum, 20% altcoins. That sounds like a pretty reasonable balance.
It's a good framework.
Huh.
And remember, you can adjust that ratio as you gain more experience and confidence.
You know, thinking back to that banana zone we were discussing earlier,
Yeah.
I'm curious, do different types of crypto perform better during certain phases?
That's a great question. And it's something seasoned investors definitely pay attention to as the economy improves and people get more comfortable taking risks.
Yeah.
We often see altcoins start to outperform.
It's like
Yeah.
once people feel secure with their basic needs met, they're ready to try something a little more adventurous.
Exactly. They're willing to venture out further on the risk curve,
Right.
seeking those potentially bigger gains. We saw this play out in previous cycles
Yeah.
where altcoins surged as the bull market heated up.
Okay, I'm starting to see how all these pieces fit together. Economic trends,
Yeah.
market cycles, investor psychology.
It's fascinating.
But let's bring it back to our listener. What are some practical steps they can take right now to navigate this market?
One of the most valuable things you can do is to zoom out
Okay.
and look at the long-term trends. Don't get swept up in the day-to-day noise.
So resist the urge to frantically refresh the charts every 5 minutes.
Exactly. Remember, we're in this for the long haul. We're talking about building generational wealth,
Right.
not getting rich quick.
Okay, zoom out. Got it.
Yeah.
But how do we even gauge whether the market is headed up or down? We talked about global M2,
Yeah.
but are there other indicators we should be watching?
Another valuable tool is the ISM Manufacturing Index.
The IS.
It's a leading indicator of economic activity,
Okay.
and it often correlates with Bitcoin's price movements.
Hold on. The ISM, that sounds pretty complex. Break it down for us like we're 5 years old.
Think of it like this. The ISM measures how busy factories are.
Okay.
If factories are humming, it means the economy is likely growing,
Right.
which tends to be good for risk assets like crypto.
So a rising ISM could be a signal that crypto is about to party.
It's one factor to consider, absolutely. Of course, it's not a perfect predictor,
Right.
but it helps paint a broader economic picture.
I love how you keep emphasizing that there's no crystal ball in crypto.
Yeah.
It's about connecting the dots, not relying on magic formulas.
Precisely. It's about gathering information, understanding the different forces at play,
Yeah.
and making informed decisions based on your own goals and risk tolerance.
Speaking of making decisions,
Hmm.
one of the hardest things for investors is knowing when to sell. When is the right time to take profits?
That's the million-dollar question, isn't it?
It is.
And unfortunately, there's no easy answer.
Okay.
It depends on your personal circumstances and investment timeline.
Okay.
But here's a key principle to keep in mind. You never actually lose money by taking profits.
So even if I think the market is going to keep going up,
Yeah,
it's smart to lock in some gains along the way.
absolutely. Greed is a powerful emotion,
It is.
and it can lead to holding on for too long.
Right.
And missing out on opportunities to secure profits. Remember, bull markets don't last forever.
So having an exit strategy is just as important as having an entry strategy.
You got it. Decide beforehand what your goals are, what your profit targets are,
Oh?
and stick to your plan. It's a lot harder to make rational decisions in the heat of the moment.
Okay, so we've talked about choosing our building materials, understanding the economic weather patterns,
Right.
and even knowing when to call it a day on a project.
Yeah.
But there's one more element we need to factor in. Investor sentiment.
Yeah.
It's like the mood music playing in the background.
It nailed it.
Ah,
Investor sentiment can swing wildly from euphoria to fear and back again.
and those swings can definitely influence how the market moves,
Oh, yeah.
especially in the short term. So how do we gauge sentiment and maybe even use it to our advantage?
There are a few tools you can use. Social media is one,
Okay.
though it's important to take it with a grain of salt.
Yeah.
Sentiment indicators can also be helpful. These track things like news headlines and social media posts to measure the overall mood.
So if everyone on Twitter is screaming to the moon,
Uh-huh.
it might actually be a sign to proceed with caution.
It's possible. Extremely bullish sentiment could mean the market is getting overheated,
Right.
and a correction might be around the corner. But remember, sentiment indicators are just one piece of the puzzle.
This has been such an insightful conversation. I feel like we've covered so much ground,
It has.
from the big picture to the nitty-gritty detail.
And believe it or not, we've only just scratched the surface. In the final part of our deep dive, we'll explore some even more practical strategies to help you level up your crypto game.
I can't wait. See you after the break, Deep Divers. Welcome back, Deep Divers. We've talked a lot about like the what and the why of crypto, but now it's time to get into the how.
Right.
What are some specific strategies our listeners can actually use to navigate this market?
That's what we're here for. Let's start with a technique that can kind of take the stress out of timing the market, dollar cost averaging.
Okay, I've heard that term thrown around a lot. What's the secret sauce behind dollar cost averaging?
It's all about consistency. Instead of trying to predict like the perfect time to buy,
Right.
you invest a fixed amount of money at regular intervals,
Yeah.
no matter what the price is doing.
So whether Bitcoin is soaring or taking a dip,
Yeah,
I just stick to my plan.
exactly. When the price is low, you buy more. When it's high, you buy less.
Okay.
Over time, this helps you average out your purchase price and reduce the impact of those scary price swings.
It sounds like a great way to avoid making emotional decisions,
Absolutely.
which we know can lead to trouble in crypto.
Yeah, it takes the guesswork out of it and allows you to build your position gradually without getting caught up in the hype.
Okay. Dollar cost averaging, checking tax. What about technical analysis? I know a lot of crypto traders swear by it.
Yep.
What's your take?
Technical analysis can be a powerful tool,
Okay.
but it's important to approach it with a healthy dose of caution. It's all about studying price charts and looking for patterns and indicators that suggest where the market might be headed.
So kind of like reading the tea leaves of the market.
In a way, yes, but remember, it's not a crystal ball.
Right.
It's more of an art than a science.
Yeah.
And it takes a lot of practice to interpret those charts correctly.
And even then, there are no guarantees, right?
Yeah,
The market can always throw a curveball.
absolutely. Technical analysis is just one piece of the puzzle. It's best used in conjunction with other forms of analysis,
Okay.
like fundamental analysis,
Uh-huh.
which looks at the underlying value of a project.
So it's about combining different perspectives to get a more complete picture.
Exactly. And perhaps even more important than any specific strategy is the mindset you bring to crypto investing.
Okay, let's talk mindset. What are some key principles our listeners should embrace?
First and foremost, remember that knowledge is power. The crypto space is constantly evolving, so never stop learning.
So stay curious, read, research, and never assume you know everything.
Precisely. Second, be patient. Building wealth in crypto takes time. Don't expect to get rich quick.
Slow and steady wins the race, as we say.
Exactly. And finally, don't be afraid to make mistakes. Everyone makes them,
Oh, yeah.
especially in the beginning. The key is to learn from those mistakes and keep growing.
So embrace the journey, the ups and downs, and remember that this is a marathon, not a sprint.
You got it. And who knows, maybe someday you'll be sharing your own crypto wisdom with the world.
That's the dream. This has been such an incredible deep dive.
It has been fun.
I feel like we've equipped our listeners with a solid toolkit to navigate the exciting world of crypto.
I think so too. We've covered a lot of ground. Understanding market cycles,
Yeah.
identifying key economic indicators,
Mm-hmm.
building a balanced portfolio, managing risk,
Right.
and even using technical analysis to spot potential opportunities.
And perhaps most importantly, we've emphasized the importance of continuous learning, patience,
Absolutely.
and a healthy dose of skepticism.
Because at the end of the day, crypto is about so much more than just making money.
Yeah.
It's about being part of a global movement that's reshaping finance and technology as we know it.
Deep divers, as always, we encourage you to do your own research,
Absolutely.
form your own conclusions,
Please.
and never stop exploring. What are your biggest takeaways from this deep dive? Let us know in the comments.
And if you found this episode valuable, hit that like button and share it with a friend who's on their own crypto journey.
Until next time, happy diving.